Today, we are witnessing a massive collision between geopolitical chaos and technical market signals. Just this a few hours ago, reports confirmed that Iran has officially closed the Strait of Hormuz again. They are targeting commercial vessels, and global energy prices are reacting violently. But what does this mean for us as XRP traders? We are actually currently sitting at a price of $1.4289. And the charts here are giving us a very mixed signal. We have a bullish indicators fighting against bearish candlestick patterns in a high stakes tug of war. So in this video, we are going to break down why this shipping crisis might be the black swan event that forces the market's hand. And other than that, I will be giving my own personal opinion on the $1.42 price level, and I will show you exactly what the Hall suit indicator right here and the QQE mod indicator right here uh, signaling during this crisis. So let's start. So why are today's bearish candlesticks worrying the bulls? So let's look at the price action first back here in the chart. Our yesterday's candlestick was bearish. This is our bearish candlestick, and it did something we didn't want to see. It closed down under our 1.4371, which is a minor support. It used to be a minor support before this breakout. Now, it is acting as a minor resistance. Our current candlestick that we are seeing right now is also a bearish candle, where we see a bearish pressure right near our broken support right here. So it is essentially retesting this 1.4371 level from the bottom, and so far the bulls are not winning. So my opinion about this is when a support level breaks the next day's candle, when a support level breaks a level, particularly a support level right here, and the next candlestick can't get back above it, that is a classic support and resistance flip, where support turns into a resistance. So to me, this shows that the market is hesitant. Traders are looking at the news coming out of the Middle East, and they are de-risking. So my personal take is that $1.42 is a wait and see zone. I'm not buying this bearish retest until I see a strong engulfing candle back above the $1.44. So in my technical perspective, since we are under the 1.4371 resistance right here, our immediate focus shifts to the next minor support positioned here at 1.3833. So if we can't reclaim the broken support quickly right here, gravity is going to pull us down to this 1.3833 level. If that fails, we have the line in the sand at major support at 1.3211 right here. The candlesticks are currently whispering downside, but the indicators are telling us a different story. So let's also talk about the hazard indicator right here, which is giving us a hidden bullish signal. Even though the candlesticks right here look ugly, the hazard indicator right here is actually green, and it is curving in an upward direction. This creates a massive divergence. Usually when the Hall suit is green and curving up, It means the underlying trend is trying to turn bullish, even if the daily price action is choppy. This is why trading is so tricky right now. You have the price telling you one thing and the trend indicator telling you another. Personally, I trust the Hawsuit's curve right here more than a single day's candle. To me, this suggests that there is a hidden buying pressure happening behind the scenes. Big players might be using the Hormuz panic to scoop up XRP at $1.42 before the next leg up. So in my technical perspective, if the whole suit stays green right here, the bearish candles might be just a fake out or a shakeout to liquidate late longs. If the whole suit stays green and we see a bounce off at a 1.3833 support right here, that could be the ultimate long entry. Ultimate long entry. However, if that whole suit starts to flatten out or flip green, then the bullish dream for April is a live support. So, what about the QQE Mod indicator right here at the bottom part of our chart telling us about the momentum? So, on April 17, we had a large blue bar that has been formed right here. This is a very bullish signal. But yesterday it followed a blue bar that got smaller in size. And today's blue bar is even smaller. So this is a clear sign of a fading momentum. The bulls are losing their steam. It's like a car running out of gas while trying to climb a hill. They had the power on the 17th, but the news of the Strait of Hormuz closure has clearly sapped the energy out of the move. So in my own opinion, we are entering a coiling phase. We are losing momentum because the market is waiting for a clear winner in the US-Iran negotiations. In my technical perspective, when the blue bars shrink like this, it often precedes a flip to red. If we see a red QQE bar form while the price is under $1.43, that is a highly probability signal that we are headed back down to the major support levels of 1.3211 or even 1.2234 right here. So we need a news catalyst to bring the large blue bars back. So let's go back to the news and how does the Strait of Hormuz closure affect XRP's utility? The news is heavy. Iran has closed the Strait of Hormuz to commercial vessels, and the ship that approaches will be targeted. We are talking about 20% of the world's oil and LNG being trapped. So my personal opinion right here is you might ask, what does oil have to do with XRP? And my answer to that question is everything. When energy prices soar, inflation fears return. When inflation fears return, big money moves into hard assets and utility assets. Furthermore, if traditional shipping and banking routes are disrupted by war, the need for a digital instant settlement bridge like XRP becomes even more obvious. So my personal view is that while the panic makes the price drop today, the reality of a broken global supply chain makes XRP more valuable in the long run. So in my own technical perspective, high oil prices above $100 often lead to market volatility. We can see this reflected in the major resistance at 1.5672 right here. This is our major resistance. This level is guarded by a massive amount of sell orders. If the Hormuz crisis escalates into a full-scale war, we might see a dash for cash, where XRP drops to $1.22 right here. But if peace deal is reached before April 22, the relief rally could blast us straight through the $1.56 resistance right here. So are the US-Iran negotiations the key to $1.56 resistance right here? President Trump mentioned the good conversations are going on and that Iran cannot blackmail the US. The ceasefire expires on April 22. So my own personal opinion right here is we have a 3-day window between now and April 22. The market is going to be incredibly jumpy. My personal strategy is to watch the 1.3833 minor resistance right here. Minor support, I mean, like a hawk. So if the news turns positive, the rebound will be violent. If the talks fail, the major support at 1.3211 is the only thing standing between us and a deeper correction. So let's look closely at our chart right here, where we are currently trapped between the broken minor support at 1.43 right here and the current minor support at 1.38 right here. This is a 0.05 range where the smart money is waiting. A break above the 1.4371 right here on a peace deal news would confirm the green Hallsuit's upward curve and target the $1.56. A break below the 1.3833 right here confirms the bearish candles and targets $1.32. The world is on edge, and the XRP chart is reflecting that tension. We have a green Hallsuit right here fighting against shrinking QQE Mod momentum and bearish daily candles. It's a classic battle of indicators. So we stay disciplined. Don't let the headlines make you trade with your emotions. Watch 1.38 and 1.43. The next 72 hours will likely define the rest of the month for XRP. And this finally ends our video. Thank you very much for watching and see ya on the next one.